I think the banking sector, the things are looking pretty all right, given the fact that the credit demand in the system remains fairly healthy. The margins are going to bottom out for the sector in the next couple of quarters because the deposit book is going to get completely repriced. We are seeing that the incremental deposit cost is under control. But yes, on the margin, given the fact that liquidity in the system is on the tighter side with RBI keeping a tight leash on liquidity, on the margin rates are a bit on the tighter side. Having said that, I think the bank's fundamentals are looking strong. We feel that banks are at an inflection point where the margin will start to stabilize in the next 1 or 2 quarters. And with credit growth remaining healthy, operating profit growth for next year is going to be mid-teens to high teens.
Okay, that's interesting. Is the market and the sector preparing for rate cuts? Are you closely watching what's happening with the Fed in terms of how that affects the Indian financial sector? Also, the RBS thinking?
Sure. So clearly, our house view is a rate cut in the later part of next calendar year. But given the fact that the inflation is something that RBI is keeping a close eye on, and they got into the reverse OMOs on the margin, they're keeping liquidity on the tighter side. Having said that, I think just to take a step back, I think banks are able to manage liquidity a lot better, given that they're depositing institutions. But over there, also, we have seen the loan to deposit ratio become quite tighter. And therefore, the focus from investors has been more on the deposit mobilization and the quality of deposits that are coming through. So the entities that are doing well on liability side will definitely attract more investors' attention. But at a broader level, the markets have been okay. The system has been able to support a healthy demand of credit that's coming through.
Rahul, just really quickly, obviously we're pretty much at all-time highs when we're talking about the Nifty, the Sensex, whatever index you want to look at India. Is there a case to be made for, any kind of short-term fade? Because, or is it your belief that we are going to continue to see further upside in these markets?
That's a great question, Will. So our strategy team recently moved India to overweight because they see a strong, corporate earnings growth of mid-teens. And we saw the start of the week has been pretty strong. Our view is that with corporate earnings growth likely to be around mid-teens, the market should do well for the full year. And within that, there are certain sectors where the strategy team is overweight on, and banks are definitely one of those sectors, which is a strong proxy to play on India's structural, improvement in the GDP growth outlook. And our economists also, on the similar tone, are fairly constructive on India's GDP growth, which is going to be north of 6% in the next financial year.